He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
And we are back.
We're back.
Jan, Ron.
Mean mortgage muggin.
Angry Mortgage, everyone. Look over there. Butler Mortgage. I gotta do please subscribe.
Don't forget to like and subscribe.
Please,
welcome to my channel.
Please give a favorable review. Give us a 5-star review on
Apple Pod and Spotify and
wherever you find your pod, and on YouTube.
Just a thumbs up.
Just subscribe
right?
and thumbs up. And by the way, on YouTube, you do not have to comment. No, I'm kidding. You can comment. We get a lot of fucking comments on YouTube, let me tell you. Holy shit. Which is fine. There's some good ones. There's some people that are nuttier than fruitcakes. I mean,
good thing we have someone filtering them, because some people are just unhinged.
You should all. Everybody should know. Yeah, we're. I've got the record of blocks on Twitter.
Probably.
On X, I have the record blocks. They sent me a note. They said you've just gone over 7,000 blocked. So no, I'm kidding. They didn't send me a note, but I'm gonna keep a track of it. I think I'm about 7,000, and
that's funny.
That's funny. I was at a conference. We're going to talk about the conference in the show. I was at a conference last week, and we went out for dinner afterwards. Some of the people from the conference and I went out, and they're all involved in social media. Smart people: John Pasalis, Steve Saretsky, Daniel Foch. Smart guys. Peter was there too. I can't remember what Peter's podcast is. Anyway, they're all good guys. And they started to talk about social media, and they said, well, some of these guys on Twitter make me so mad, and then some of these guys on Instagram say this stupid, and one of these guys on YouTube says, I said, hey, guys, relax. Just block everyone.
Yeah.
And then then two of them said, yeah, you blocked us in the beginning.
Oh my God.
Like Steve Skresky said, yeah, I got guys who send me direct messages and say, please tell Ron to unblock me, please, I'm blocked.
That's so funny. Oh my God.
Anyway, I don't know whether that makes our audience feel good. You're not blocked. Okay? Just feel good. You're watching. Okay?
Don't be unhinged and you won't get blocked. No trolling.
I'm a blocker. What can I tell you? I'm a blocker. So anyway, we've explained it before, but I'll mention it again. I don't block people who disagree with me at all. People say, you just disagree with Ron and he blocks you. Yes, because your disagreement was, you're so fucking wrong, was how it started. And if you do that, you will be blocked. I'm happy if you just say, Ron, I have a different take on this. Let me explain it to you.
In my opinion,
I'll explain why. Here's the reasons. As opposed to, yeah, what the fuck does a mortgage broker know about economics, you fucker? That will get you blocked. Okay, that's not a difference of opinion.
Yeah, 100%.
All right, let's get started. So we have had so many inquiries in the last month. You see some of them, okay? Yeah. Inquiries about, hey, I got a variable rate, and my payment's gone up and up and up.
It's not going down.
But the Bank of Canada is down 3 times. But my payment hasn't changed. So all these people are not happy campers.
Of course, yeah.
They're not happy. Nobody's happy. And a couple of them did say, when I called my bank, they said it's not going to go down. What's going on? So we're here to explain today what is going on. All right, it's a little bit of detail. We're going to break it down though, because it's important to everybody who has a variable mortgage, and it's important to people who might be thinking about getting a variable mortgage. Here's how it works. Banks take variable mortgages differently. Each one of them takes a little slightly different look. A couple of them are very simple. A couple of them are sometimes referred to as a true adjustable mortgage. But but everybody calls it variable, so I'm just going to try to break it down for you. So you got Scotia, National Bank, other companies who are called mortgage finance companies, which are like MCAP and First National. Some people definitely use those lenders. There's a bunch of other ones too. There's CMLS, Marathon, MCAN. There's a bunch of these companies who just specialize in doing mortgages. Okay. Right. They are institutional. They are either have to follow the institutional rules. They have billions and billions and billions of dollars in mortgages. Okay. Billions, 175 billion. That's like real money.
Yeah.
At the end of the day. Not banks, but they're huge. All of those companies use a variable rate mortgage that the rate goes up, the payment goes up, exactly the amount of the increase. So if there's a 0.25% increase, they just recalculate the whole thing, go back to your correct amortization, and say, here's your new payment starting next week. Here's your new payment.
Right.
And then it goes up again. You get the letter, you get the email again. Hey, there's it is. You get the text, whatever. Hey, look, here's your payment date. It's going up again. And then for Christ's sakes, like, let's face it, for 17 months, that's all people got. Hey, it's going up again. Hey, it's going up again.
Yeah.
Hey, one time it went up 1%. Jesus H. Christ. Right?
Ooh, painful times.
Whew. So everybody who has mortgages with those companies understands what happened because they just lived it every 6 weeks. They lived it with a new increase. Oof. So you understand. That's how it works. Now, the only upside to that horrible experience was because we went from 0.25 to 5 in a short period of time.
Very short, yeah.
Which is the highest, rapidest, steepest percentage increase we've ever had from a central bank in Canada. That's it. That's the fastest and highest. It's been higher. Like there was a time it was 19%. Okay.
Yeah, but
30,
the
40 years ago
wasn't as bizarre.
But it happened like it sort of went from 12 to 19, but it happened took a long time. So anyway, I digress. This is the sharpest, steepest increase we've ever had. So
yeah,
everybody felt it. Everybody saw their payments go up. They saw it every 6 weeks. Their payment was going up, and it was tough. It was hard. It was very hard. But now those people, Scotia, National Bank, I think Desjardins too. That's okay. I think maybe Laurentian, not sure, but MCAP, FirstNet, all those other companies, CMLS, all these uniquely just mortgage companies, they all are going down. They're all coming down, and they're coming straight down. They'll continue to come down. They'll continue to come down next year. Okay, those payments will reduce. Now, let's talk about everybody else. And everybody else is RBC, CIBC, TD, and BMO. All good peeps, all good banks. They took a different approach. They said, okay, we are not going to increase the payment. We obviously have to increase the interest. Well, I always explain it this way. Let's say your payment was $2,000 with CIBC. Your payment's $2,000, and at the very bottom, when prime rate was only 0.25, a quarter of 1%, you were paying off $1,300 a year. Mortgage was going to principal. $1,300 of the $2,000 was going to principal. Only $700 was going to mortgage because the interest was so stupidly low. Okay. Yeah. Well, it wasn't stupid. People enjoyed it. I guess I shouldn't say stupid. It was just amazingly
enjoyably low.
Enjoyably low. Right, exactly. Enjoyably low. Okay, it was a pleasure to have that rate. So that was it. Now, the rates started going up, and suddenly, instead of $700 for interest on $2,000, it was $770. And then there was the big 1% jump, and now the 1% increase, it's now $1,060. And it kept going and going until finally your payment's $2,000 and the interest hit $2,000.
And these banks, they allow you to not pay principal, right? Because I believe it was RBC, you said, was the one that had that minimum.
That's accurate. So you're right, dead on. So RBC, as soon as your interest got to be as big as your payment, The next time it went up, they had to increase you.
Minimum $5, but
no, you have to pay off at least $5 of
your
principal.
Yeah.
So if it went up 50 beeps, you could conceivably that could be $300, right? So it could absolutely go up. On the bigger the mortgage, the more effect. Okay. So RBC the benefit with RBC was, and is to this day, you never have your mortgage grow. Mortgage never grows. TD, CIBC, BMO, your mortgage grows. Okay. Now, all of those banks have different contracts, and I'm not going to go and break down everybody's contract because they're all different. Okay. I'm not going to start reading the clauses of the contract on the air. Okay. But they all have some sort of trigger mechanism.
Right.
There's always a point when, even though your mortgage is growing, you're not paying off any of the principal. In fact, your interest is higher than your principal, and your mortgage balance is growing. Okay. There comes a moment when and it's a different formula for every bank, but there comes a moment when they say, no, you've triggered it, you've reached your trigger point, and now you have to pay more.
So are they obligated to inform the customer that, hey, like you're at a point where you're only paying interest?
Oh yeah. No, the great thing about online banking is you can look at your mortgage and you can see that the mortgage is getting bigger. Okay.
Right.
There's always notification of a Bank of Canada change. And it's, like I say, as long as you can just go and look and you notice things like, oh, I thought I started with 30-year amortization,
right?
But now I have 87-year amortization. So something's gone way off here, right?
Yeah.
Like that was really gone to hell in a handbasket over here. So yes, you would always know. They would always notify you of an increase. You were always informed. Okay. But then when the moment came, and RBC would inform you, hey, you're no longer paying enough interest. Got to increase your mortgage. You'd always get notification.
For sure.
So when the trigger rates hit, you do get notification, and it's different for everybody. I wish I could go into it. And by the way, some people voluntarily said, yeah. I got to start making extra payments, tack me on some extra payments. Okay. Now, all of those situations, let me just take the example of RBCs. So RBC said, in order to make sure you're always paying some principal off, even if it's only $5, we've raised several times. You've been raised several times, and you might have started at $2,000 and now you're at $2,600. Okay. And so you notice that, hey, look, Bank of Canada coming down. Like, look at that. So, hey, RBC, there must be some confusion here. My payment's not coming down. Well, RBC's response is, your payment's not coming down. We don't have any mechanism to reduce the payment.
Right.
Now, all that being said, you could apply. Like, you could go into RBC and say, well, I really need the payment to come down. And as guaranteed by the federal government, you have the right to submit a case for financial hardship, that you need to get something changed, you need to get it reduced, you need to increase your amortization. There's many things can be done. But a lot of people don't want to bother, right?
Yeah. Well, ideally, you want to pay off your mortgage, right? Yeah. And aren't Canadians, like, we're known for wanting to make that payment first, like above any credit card or student loans, whatever. Mortgage is always like 100%.
100%. So look, we've gone through this incredible rise in rates. We've had just under 50% of everyone in Canada has experienced an increase in their rate, an increase in their payment. They've gone through renewal, or they've gone through this experience with variable. Their payment's gone up, maybe more than 50%. Yeah. And our 90-day default rate, in other words, people who haven't been able to pay correctly for 90 days, which is the typical measure banks use to say whether you're in trouble or not.
Yeah.
Because you can always miss one payment, right? Like you've been on vacation or something, changed banks or something happened.
I had a case where somebody said, oh, I just, it came in earlier than expected, so I didn't have the funds in the account. Yeah. Something like that could happen for sure.
It can happen. Yeah. So then you catch up. So they don't even care. Yeah. Like a one-time arrears, a one-time bounce on your mortgage, not really paid attention to, but it's just this 90 days of arrears. You haven't been able to make the full payment for 90 days.
Oof.
That's the key measure, okay, that you're in trouble.
Yeah.
And that rate in Canada is still only about 21 basis points. So in other words, less than today, less than 1%, way less, like 79% less than 1%. it's a very small number.
It is.
Okay, are in 90-day arrears, 90-day default. Compared with like a good year in the United States, it's 34 or 36, right? So when U.S. bankers look at our banks, they say, you're stupid. You're not lending enough. Your arrears are so ridiculously low. It doesn't make any sense. Now, let's get this straight. They're going to go up. I mean, the economy's suffering. Unemployment causes default.
Yeah.
We know this. Like it is this, when you talk to a chief risk officer at a bank and say, what do you worry about? He says, I worry about three things. Unemployment. That's what I worry about, because you can't rescue that, right? There's no method to fix that. Your income's been cut in half, or family income's cut in half.
Yeah.
You got to eat, okay? And the mortgage is too high. That's it. So, but all that being said, very low default in Canada. You are correct. Incredibly low. It's gone up a little. It used to be 16 basis points. That's so ridiculous, right? That's just ridiculous.
Still, yeah.
Yeah. So that is low, and it will continue to be low. But what happens is that all those people who might want to go in and they'll yell into the phone, at Royal or CIBC or RBC or TD or wherever it is. Hey, no, I want them to God damn it, the rates are coming down. I want my payment to come. That's not what your contract said.
Right.
That's just not what the contract said.
Right.
You hit trigger points. You hit contract requirements. We raised your rate. We don't have anything baked into the contract to say your rate goes down. You can apply, but it's on the basis of hardship.
Right.
Okay?
Right.
So that's your answer, folks. Everybody out there who's saying,
my rate hasn't come down yet, or
what the hell's going on here? I mean,
remove yet, because it's probably not going to happen.
Okay, look, that brings up, what is the solution? So what is the solution? You can switch, right? You've got a variable rate. You can say, well, the hell with this variable rate that never comes down. I'm going to switch to the variable rate that does come down, all right? But that's a penalty. You switch banks prior to the renewal date, it's a penalty.
Right.
The penalty in variable is always the same. Every bank's the same. 3 months interest. Okay. There's a few banks that have something called a bona fide sales clause where you can't get out at all, or if they have a very high penalty, like 1% of the mortgage penalty kind of thing. But that's rare. I'm going to say 98%, 96%, somewhere in that range, are all 3 month penalty. Okay. But prime today is 645. Yeah. So 3 months interest on a $500,000 mortgage is just under $5,000. Yeah. Okay. So it's still real money. But if you're stuck in that situation where you would really, really, really like to see your payment come down, start talking to other banks, start talking to mortgage brokers. Okay. Call up mortgage brokers. Say, hey, show me the numbers. It's easy to calculate the 3 month penalty. How much can you save me? Whether it's fixed or variable you go to. Yeah. What can you save me? Because in theory, you could pay the penalty, get out of one of these variables that won't go down for 2.5 years or 2 years. You can switch over to either a fix, but if you even took another variable, that variable is going to come down. You're going to go with a bank that has it come down, right? You're going to go Scotia or MCAP or FirstNet or National Bank. You're going to go with somebody who the payment comes down every time the rate comes down. So by doing that, you will end up in a better situation. But you have to do the calculation. You got to do the math. Yeah. You got to make sure that the cost of the penalty versus the savings to switch makes sense. Take out the spreadsheet, figure it out. Yeah. Okay. Now, I was at a conference last week. I was at this all-day conference. Good guys, Veritas, a good organization. They put on a lot of good research. They put on a great conference of all kinds of sort of insiders, people who are on the inside of the business. And holy shit, I'll tell you what I got out of that one. What? We got dog crate condo doomsday coming. Oh, I mean, holy shit. Yikes. Like, we had guys who had the absolutely accurate data. We had, it was shocking. Okay. Wow. So, and some good gossip too. True gossip. It's not just bullshit gossip. Like, I'm not just saying, hey, who's in the Diddy tapes? We're going to have the Diddy tapes in. There are going to be some famous people in those tapes. Okay. You've been seeing a lot of that? I've been seeing that on social media.
Yeah. Apparently a lot of, CEOs have stepped down and a lot of
Oh, really? I didn't hear that.
Yeah.
Shit. Okay.
Yeah. So
I saw one top A-list star and Diddy tape. I'm releasing it tomorrow. I mean, oh my God.
We got to wait for the court papers.
What's more exciting, the U.S. election or the Diddy tapes?
Obviously the Diddy tapes.
Do
you know
Diddy.
My generation?
Clearly Diddy. Diddy bigger. Diddy is all.
Okay, half of us don't even believe in voting, so
yeah, you're right.
Diddy's
you're
kind
right.
of our thing right now,
But
fortunately.
Oh my God, there's like so much. Apparently Costco was really
They
put out.
denied.
They denied it. They denied
The baby oil thing,
that
right?
is not our baby oil, you sons of bitches. Costco is not involved in Diddy shenanigans. Okay.
Poor Johnson & Johnson. They're gonna have a profit hit.
Shit. Like, oh my God. Oh Lord.
I can already hear like older people in the comments are like, "This is why you guys are not making a future. You're focused on the wrong thing.
You're focused on the wrong things.
You need to vote.
Lattes.
Pay attention.
Lattes and Diddy, you bastards. Okay, that's what's wrong with you.
Okay, lattes and ditties are a thing because we can't afford homes, okay? Leave us alone. We have to have something that makes us happy, okay?
Something interesting. Diddy is interesting for
Yeah.
sure, you know. You got to admit, if a whole company the size of Costco's got to get involved and say, not our baby oil, that's not our oil, okay? Like, that's pretty wild.
Yeah.
That is wild. Anyway, I'm 67 and I have like a passing interest in it. I mean, I think, who's that tape going to be of? Who's that? Who's going to be in that tape? I mean, it is messed up, right? It's
messed up.
messed up. But and yet, interesting.
I'm still here for it. I'm sorry for the victims, but I still would like to know.
Very sorry for the victims. But let's face it, consenting adult mischief is worth watching. You know, like they got to be adults. I don't want any. They can't be trafficked. I don't want to see any of that.
Goodness.
But like, if it's a famous,
I think it was a lot of like kitties though.
Oh, that's horrible. I don't
Yeah, because like the whole thing was Justin Bieber.
Justin, we're not saying anything actually. Justin, I think everything was okay. Nothing bad. He didn't do anything wrong.
We're praying for you. That's
praying for you. Yeah. I mean, no, look, it's horrible. Like it's the stuff. This trafficking stuff is just god awful, and the underage stuff is maybe the worst of the worst.
Yeah, we live in very fucked up times.
But if there was just some really famous 30-year-old actor and Diddy, you know, I might look at that. Like I could.
Ronald, not safe for work.
No, I guess not. But still, I might. I gotta be honest. I might. I just might. I might do that. But anyway, I think we just had 1,600 subscribers just unsubscribe themselves.
They're gonna find the keyword.
Yeah,
and
we're
they're like,
unsubscribe this fat fuck. So anyway, the dog crate condo doomsday. So what the fuck? So I got like lots of accurate numbers. So in the next 2 years, there's about 75,000, pretty much 75,000. I've been saying 40. I've said 30. I got my eyes opened at this conference. It's like 75,000 almost guaranteed in the next 2 years. Okay. 75,000 might be a little less, might be 65, but it also could. Here's the reason it's not accurate, because they take a start date of the condo. And we've talked about this 100 times. Condos take a long time to build.
Yeah.
High-rise condo, 250 units, 300 units, 400 units, takes a long, long time to get these dog crates up there. Okay. 6 years, 5 years, 4.5 years, but it takes time. Okay. From the day they start digging, takes time. So you can estimate from when the dig started, and you can say, I think it's going to be ready. And also, it's the announced date. It's the date they announced we plan on completion on this date. Okay. But it doesn't always work. There's delays, slowdowns, whatever the hell. So it's tough to give perfectly accurate data. But in theory, in the next 12 months, like it's possible, 24 months. It's possible in the next 24 months, 75,000. Okay. That's a ton. That's a lot of units in the GTA.
I'm sure not all of them are going to be closing too.
No, well, yeah, some of them might be interim occupancy. You're right, which is I won't tell. We'll get into that for the folks today, but yeah, you're quite right. That's possible. Okay, but that's a lot. That's a lot. That it's time to get ready to get a mortgage and to get finished. Okay, so the whole concept here is we've talked about it before, but I got to get a quick run through that. You bought a condo 5.5 years ago. And you put a 20% deposit down on a unit. It's a dog crate. It's 500 square feet. hey, it was great because at the conference, everybody started using the dog crate terminology.
Oh my God.
Well, a couple of people in the business just said small condos or tiny condos or so. They were better, but pretty much some of the people were just saying, yeah, the dog crate condos. Okay. And that
Are you a trendsetter?
No, I'm not. But I am proud when I can do some evil in the right way. Okay.
Oh my God.
So there was, like I said, dog crate condo, 500 square feet, and you paid, say, $1,200 a foot for it. Right now, and that building is coming to completion. And right now, just across the street, literally across the street, down the block, is another building. It's 3 years old, and it is exactly the same dog crate. Like, it's the same amenities, same floor, same everything. Duplicate dog crate across the street, being offered today for sale on a resale, $925 a foot. You paid $1,200. That's a yikes. Yeah, that is a yikes. Yeah. Okay. And what's the difference? Yeah, you might say, well, one of them's got a little bit more warranty. One of them's a little bit newer. It's brand new, blah, blah, blah. Fuck that. That's a huge fucking difference for the same dog crate. Okay. Yeah. So yeah, the problem we've talked about before is, what do you do? Like, you could have an appraisal problem, right? You could have a big appraisal problem. The appraiser could come in and say, well, wait a minute. I realize you bought this for 1,200 square foot, but it's exactly the same as 925, buddy, across the street. And I can only appraise it for like 950 best. So, well, what that does is you have to now come up with more down payment.
Yeah.
By the way, you gave 20%. So let's just figure it out. You gave, let's assume you were paying $650 for the sake of argument. Okay. Well, what would it be? 12 times 5? What is it? 6? Yeah, it's 6. You paid $600. So it's a 500 square foot dog crate. You paid $600, right?
Okay, yeah.
But it's worth less, okay? It's worth less than $500 now, okay? And so you put 20% down, so you put over $100,000 down, and they said, no, it's not even worth that. So what do you do? Because you would have to come up with more down payment.
Yeah.
Your down payment's now based on the $950.
Because you're only getting the mortgage based on the appraised amount, correct?
Exactly. That's exactly correct. Okay. So now you've given the 20%, you've given 120, and now you got to come up with more to close.
Yeah.
Okay. And here's the worst part. It doesn't rent for enough to cover. Like, when you add up your condo fees, you add up your property tax, you add up your mortgage payment.
Hydro, water, gas.
Well, that's
everything.
sort of that. Yeah, actually, there's usually at least
not all of the
not exactly, not all the
monthlies. Yeah. Usually hydro is the one that's not included.
Correct. Usually it's metered on power.
Right.
Correct. So, and sometimes heat too.
Yeah.
Sometimes
Yeah.
So you could be looking at it saying, sweet. Well, you could actually get the tenant to pay that stuff. I'm not sure, but let's just say you can, but you can't always. So let's just make it simple. That adds up to more than you can get for rent.
For sure.
So you have to lose money. You've lost all the value of your deposit.
Yeah.
When you close, that's gone. It's gone already. It's gone. The builder has it. Okay.
Right.
You have to come up with more money because your appraiser failed. Your appraisal failed. Okay. You have to come up with more cash, and when you finally close, you have the honor to lose $250 a month. Oh, but the kicker of kickers, the killer to this whole thing, why it's dog crate condo doomsday, is that it doesn't look like that price is ever going to go up. That $925 might stay the same for another 2 or 3 years. So the idea that if you just closed and waited a few months and sold, no.
You're going to keep losing money at that point.
No, exactly. Okay,
Holy
so
shit.
some people just run. Another great piece of information from the conference. I talked to several realtors who are involved in that business, and they said, I'll tell you how bad this is. And it's bad. We've had people who've been approached, like they're trying to do, they're advertising in different places to say, hey, will you take my condo off my hands? Take my condo off my hands. Because some people are even having a hard time closing. They never actually planned on closing. They were going to sell it by assignment, right?
Okay.
They always, because they might have had 4 before over the years. They might have started 10, 12 years ago. And they were always able to sell by assignment, which is just, hey, this condo has gone up. Look, I paid $300 for it. Now it's worth $400. I'll assign it for $375. You pocket $75,000 profit, never close. Okay. So some people aren't even actually ready to get a mortgage. Like, they don't actually make enough money to get a mortgage. Okay.
Right.
They've just been sort of upgrading the down payment through the whole thing. So what happens to them? they look at it and say, hey, I can't get a mortgage. I know my 20%'s gone. The deposit's gone because this prices have fallen. Okay. So they're approached by someone. They're advertising it. Hey, I'll sell this to you. I'll sell this to you for $480. I paid $600. I gave $120. I'll let it go for $480. So they advertise that different places. I don't know. Who knows? Reddit. Where do you advertise that? I don't know.
I don't know.
GG
Facebook.
somewhere. Who knows? Facebook.
Yeah.
So somebody contacts you and says, hey, yeah, I will take that condo off your hands. Great. You'll take it off my hands for $480? No, not $480. I'll take it off your hands for $400. But wait. I've already lost all my deposit. 80? How? 400? What are you talking about? Yeah, why don't you just reach into your HELOC on your house that you own, take out 80 grand or take out 60, empty 20 out of your savings, and give me the 80. What the fuck? What are you trying to destroy me? Right?
Sounds extortionate.
Sounds a little illegal, right?
Yeah.
Not illegal at all. It's just an agreement between two people to sell something. That's open season. Okay.
Wow.
So why would someone ever do that? Why would someone have paid $600 for something and let it go for $400? Why would anybody do that?
Don't really have much of a choice.
They can't close, and they know the builder's going to give them a lawsuit.
Yeah.
They're scared. Okay, so some of these, I'm told from people who are in that business, yes, that's happening, and people are losing that kind of money. They're not just losing their whole deposit; they're going into their HELOC and giving out more. Okay.
To get this thing off their hands, basically.
Yeah. Holy shit. So yeah.
Damn.
Dog crate doomsday. But wait, there's more. Okay. So here's what I also learned. There's these probably 75,000 closing over the next 2 years. And then the following year, there's about 25,000 closing. And then the following year, there's like another 12,000 closing. And then what do you think the following year after that is? Like 5 years from now. How many closing? How many condos in this huge city of Toronto? All the GTA, 905, 416, the whole 9 yards, okay?
It seems to be going a little downhill, so maybe like 8,000?
1,500. 1,500 in
The
year
whole
5.
GTA?
In the whole GTA.
What the fuck?
Yeah.
And that...
By the way, these are hard numbers. Let me explain why these numbers are now baked in. Because normally they'd be continuous sales, right? They'd be selling. There'd be lots of condos sold this year, lots of condos sold the year before, lots of condos being sold this month.
Right.
There's no pre-construction condos being sold this month, like zero. Like Suite FA is being sold this year, okay? Because they opened 75 sales centers and they closed 72. They just gave up. They said, okay, project's on pause. We can't get enough people to buy, okay?
What is going on? So then how's that going to hit the construction industry? It's already like pretty harsh as it is.
It ain't good.
Yeah.
Because we used to, we had the record cranes in the world, record construction cranes in the world. Maybe not the world, but certainly North America. Record cranes. Some years we were 3 times the next closest. I remember one year we had triple of LA in Toronto. LA is a bigger city, right?
LA's huge, yeah.
Okay. So it's going to go to zero maybe. Except like hospitals and,
of course,
government projects and stuff.
Yeah,
okay?
yeah.
But yeah, we're going to go from hero to zero. Okay.
What the fuck?
So, but that is, by the way, those are real numbers based on starts that have already happened. And let's just be honest. If you started zero this year or close to zero, or you only started 1,500 this year, well, 5 years from now, it's going to be 1,500, right? I mean, that's just the way it goes.
This is why we all feel like we're just screwed. Like realistically, if you were my age, would you stay in Canada?
God damn no. I bet you'd have to either have to pray for change, like like new government everywhere, change everything, or So
it just looks so hopeless.
Oh, by the way, it looks hopeless now. That's the bad news for condos over the next 5 years. We started in the whole province of Ontario, the biggest province in Canada, over 16 million people, in a housing shortage, in a severe housing crisis. We started under 20,000 single-family low-rise townhouse, under 20,000 in all of 2024.
This is why people are living with their mothers, grandmothers, whole families, sisters, friends. Like, it's the harsh reality.
And to your point, what the hell's going to happen to the construction trades?
Yeah.
Sure, there's hospitals, there's government projects, there's things like that.
But once you have that contract, you're locked in. How about everyone else? How about people who are doing odd jobs? How about people who are, like, I know union guys who are just sitting at home waiting for that call.
You do,
Yeah, I do.
Yeah, we get those comments all the time.
It's rough.
We get the social media comments all the time. Whenever we talk about the trades, we always get the same thing. Oh man, this is the worst I've seen it. Particularly for the people who are, building. There's two kinds of building, right? There's slab, which is the high rise, high rise office, high rise condo, high rise, hospital slab, right? They're made out of concrete, okay, and lumber, which is like low rise. Those houses, semis, towns, two duplex. There was a thought to try to use lumber timber all the way up to 5 stories. I don't know whether it's come through yet, but we'll see. Bottom line is this: not happening.
Yeah.
Like, it is going to slow right the fuck down. Okay.
More than it has. That's really
more than it has. And it's just inevitable. Like, if you don't issue permits and nobody puts a shovel in the ground, there's no work to do.
Yeah. Unless you're working in renos, I guess things are just really slow.
Well, even renos. I mean, the economy is kind of crappy. So who's doing renos?
I actually knows a contractor who's been pretty busy, but
Good.
I know a couple who have been pretty busy. But I mean, I guess at this point, like, you're renovating because you absolutely need to, right? Like, we renovated our washrooms because we absolutely needed to.
Short job.
Right? Something quick, simple. But it's like, I can serve, if we had an old kitchen, for example, it works. As long as it works, if it ain't broke, don't fix it type of mentality.
Yeah, absolutely.
Right?
That's the way a recession goes. If it's not broke, don't fix it. Absolutely. There's no upgrades for having an upgrade.
Yeah.
No upgrades for upgrade's sake. You're absolutely right. All right, we have a few questions.
So, this one says, can you explain the mortgage approval process of land to construction loan? What type of risks would you address, and what should someone look at?
Good question. I mean, some people do try to build their own houses. Some people say, oh yeah, I want to get out of the city. I see this farm out in the middle of nowhere, and I've talked to the farmer, and he's subdividing, and we're going to chop it up, and then I'm going to buy one of those pieces. Maybe it's 2 acres, maybe it's 1.5 acres, whatever, and I'm going to build my own house on it. Okay. Well, typically most people need some kind of financing. If you got a paid for a house in the city, you can get a HELOC and pay for it yourself. But here's the trouble with lending on raw land. From the bank's point of view, it's only worth what it's worth when it's finished. Sure, the land itself has value. Let's say the lot, once you get the power to it, you got to get, you got to get hydro to the lot. You got to get power to the lot. Once you've established that, and it's always just well and septic, so you got to make sure you can accommodate for that.
Septic system, yeah.
So,
It's pricey.
it might be worth 40 grand, that lot. It might be worth 50 because it's not in the city, right? This is way to hell and gone, middle of nowhere kind of thing. Might be beautiful, but still, it's not. I'm not talking on a lake. A lake, if you have lake frontage, you can have real value. Like that's got a formula attached to it. Okay. But if it's just you want to build in the country, that thing might only be worth 40, 50 grand, and you're only gonna get lending on like 50%. 60%. So you're going to get nothing in lending.
Yeah.
Now, what about if I start building run? Well, you got to do a whole bunch of the work first. You got to have all the plans, the permits, so every sort of thing's paid for. You got to dig the foundations. You got to pour the foundations. And so you've paid all the engineering, all the architects, you've paid the city, you've paid the town, you've paid everybody. You've dug the hole, you've poured the concrete. You might have gone through 70, 80 grand already. You have to do that all on your own. That has to be coming right out of your pocket. Now then, once you get to that point, construction lending could start. Okay. But yeah, here's my proper answer to that question, which is a good question. My proper answer is don't do it. Just don't do it. I mean, just find a house. Find a house way out in the country that's finished that you like. Okay.
Okay. This one says, I thought CMHC was the only mortgage insurer, but they're not. and the others are owned by pension funds. I heard that one will even insure your mortgage if your down payment is from a line of credit. How high risk are the other mortgage insurance companies?
Great technical question. So I got to get a little technical. Yes, there are 3 insurers. There's the pure government insurer, who's CMHC. There is another insurer, it's a private insurer called Sagen. Another insurer called Canada Guarantee. Shout out to my friends at Canada Guarantee. I love you guys at Sagen, but my good friends are at Canada Guarantee. So they all have the same level of risk. So the CMHC is 100%. The company of CMHC is 100% guaranteed. All claims are guaranteed by the sovereign state of Canada. It's called a sovereign guarantee. At Sagen and CG, Canada Guarantee, it's 90% guaranteed by the government of Canada. 90%. Okay.
Yeah.
Now, they also are insurance companies, so they have tons of reserves. They have to put all kinds of money aside. They had to start with money back in the day, a long time ago when they started. They had to have millions and millions and millions of dollars put aside in reserves. So the 10% is kind of looked after by the reserves, right? So, and they're very profitable organizations. So that's the answer. There's 3 of them. And yes, they mainly have the same programs. There's a little bit of variation, but I would tell you that it's pretty much the same. Yes, in some cases, under certain programs, you can borrow money for part of the down payment or sometimes all down payments, very special circumstances. Look, I don't want to teach everybody the mortgage business in the podcast, but that was a good question. That yes, there are 3 insurers. The levels of risk are effectively identical. I don't call 10% worth worrying about. Okay, they're in essence they're all guaranteed by the government of Canada, and that's good, folks. That's good because that actually attracts lower rates for government guaranteed product. So what's wrong with that? What's wrong with lower rates? But wait, Ron, what if they go broke? Please, sweet Jesus, they're not going broke. Okay, these are profitable companies. CMHC has delivered billions and billions of returns to taxpayers of Canada. So let's calm down on that stuff. That's a quick rate update. Rates have no change last week, but bond yields went up quite a bit. Bond yields went up 30 basis points. A bunch of people started screaming at me, "Hey, Ron, what happened to bond yields?" Okay, so I got to go back to this now. Okay, that I haven't had to say for a few months. It's not fucking linear.
Yeah.
Okay, like it is. There will be bounces. There will be sometimes the rates will even go up slightly.
Yeah.
But please, sweet Jesus, everyone, the future is down. Hey, Ron, I heard Desjardins economist said that this might be the lowest point. Okay. He can say whatever the fuck he wants.
Yeah.
Okay? And he's probably a very, very smart person. And I'm sure he has great analytics behind him. But I'm just making it clear. I think the rates will continue to go down. They're not going to go down to 2.99. They're not even going to go down to 3.29. They're not even going to go down to 3.39. Okay. But they will go below 4. The time will come when there'll be multiple rates in Canada, all available with a 3 in front of them. Okay. But it's not tomorrow. Okay.
Yeah.
Not tomorrow. All right. But there has been a significant bump in bond yields. They had a huge on Friday. I can't remember, Thursday or Friday. They had a huge jobs report out of the U.S. Very successful jobs report. The only thing about those jobs reports is they keep getting revised over and over and over. But still, a great jobs report. The economy in the U.S. is not our economy. Our economy is in trouble.
Yeah.
Their economy is nowhere near in as much trouble. Nowhere near. Okay. Many reasons, but nowhere near. So we're 2 different places. Okay. So favorite part of the program?
What the actual fuck?
All right. What the actual fuck is going on with Ontario and Toronto? Like, I go to this conference and there's an old man. He's an old man like me. Been around, urban planner, been doing it for 40 years, worked on huge projects, fucking huge projects. I think he was even... Back in the day, he was working on some of the Eaton Center stuff. I think he might have been involved with the well, but he's just done tons and tons of work. Smart guy. And he comes up and he says, "Look, I got to tell you something about Toronto." You know, he didn't say this, but I'll put it into Ron Butler language. He said, "Toronto is fucked. It is the fuckedest uptest place. Fuckedest uptest." Okay, so. He talked about Houston. He said, Houston, they have a lot of urban sprawl, but they have urban sprawl. They're spread out all over the place. They spread out for miles and miles and miles and miles and miles. They have 20, folks, listen, 20 expressways most of which lead into the city.
Must be nice.
We got like 4.5, 3.5 maybe. Do we have 3.5?
Yeah, 3.5.
In Toronto, we got like 3.5. Okay.
Yeah.
Like 20 in Houston, about the same size city, folks. It's about the same size. Okay.
Yeah.
We got no fucking transit. Nope. We can't even. They've given up again for another year and never finishing the crosstown LRT. But wait, there's more. Compared with London, compared with New York, compared with Paris, compared with so many cities. And by the way, Toronto's an old city. It's over 200 years old.
Yeah.
Okay, like, come on. We don't have transit.
We've been left behind.
We don't have transit. I mean, Tokyo, Jesus. Okay?
Oh, gosh.
Like, unbelievable. Like, you know, somebody spent some money sometime, and somebody knows how the fuck to do it. I don't think we even have anybody who knows how to fucking do transit anymore, or maybe not for 25 years. It's so neglected, so fucked up. So he said, folks, we're also the fastest growing city. We're one of the fastest growing cities on earth.
Toronto's infrastructure was not built for the growth that it has. But the minute they seen that there was like exponential growth, they still didn't do
stopped.
anything.
I think they stopped growing.
Nothing was done.
Nothing was done. Absolutely nothing done. Okay.
So
this is a guy 40 plus years at it. And to summarize, don't take offense, but to summarize for him, no expressways.
Yeah.
We didn't build any kind of proper access to any part of town. No expressways, hardly any. 401, you just laughed at he said tunnel under the 401. Fuck no, not happening. He says it's actually preposterous. So we didn't build enough expressways anywhere near, and we built no transit. We have the worst of all worlds. The worst. So hey.
Yeah.
Toronto, Ontario, wake the fuck up. Yeah. You're the worst of the worst at everything, for God's sakes, all right?
Unfortunately.
God damn it, makes me mad. All right, folks, next week.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.